We're facing a global housing boom. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee because I want to talk about this article from Yahoo Finance, which is entitled, Beware of the Latest Global Housing Boom. Now, we're all concerned and aware of the property and housing boom we have here in Australia. I mean, the joke is, why start a business? It's not really a joke, actually. Why start a business when you can just buy a house and sit on your ass and make more money? Now, if we can see here, let's just have a look at our capital cities. Housing has been going up. Even the regional, it's been going up. And you got it at different levels. Sydney has been going up. And I'll just refresh this. There we go. And then same thing in Melbourne. We'll refresh this too so it reloads. There you go. And good old Brisbane, everyone. And I'll have to reload it there too so you can see. But it's not only in our cities. It's been happening on the global stage. Here we have New Zealand, US, Australia and Canada on the left-hand side of the chart, UK, Sweden and Norway on the right-hand side of the chart. And this is house price indexes which are showing just the house price relative to 2017. So with this chart, you can see 2017, the value is 100. So it went below 2017 for some portion of 2019 and is steadily climbing up, at least in Australia. Same thing for Sweden, a little bit in Norway as well. But look at New Zealand, look at US, look at UK, it's surging. So while we may be feeling like we're having a house price surge here in Australia, we're certainly not alone. So let's have a look at this article and see how they're framing it. The global housing market has gotten too hot to be sustained, according to Oxford Economics' deep dive into more than 121 years of housing data. So does this mean the global housing boom is coming to an end? And will this mean house prices here in Australia were correct? We just looked at examples yesterday where people were moving. We're moving from Sydney and Melbourne to Brisbane. And I suspect we're seeing the same thing happen in Darwin and in Adelaide. People uprooting and looking at cheaper places to live, more affordable, better lifestyle, more freedom. At least for now. Home prices in advanced economies may be about 10% overvalued compared to the long term, according to new research from Oxford Economics lead economist Adam Slater. This boom, he notes, is one of the biggest since 1900. The last boom period in 2006 saw home prices 13 to 15% overvalued based on Oxford's analysis. Students of market history remember what came next, a global financial crisis fueled by rampant speculation in the global housing market. Such strong price appreciation, currently driven by low interest rates and shifts in the wealth of populations, has Slater concerned about a reversal in prices not too far off in the distance. Some evidence suggests the longer a housing boom continues, the bigger the risk of a large reversal. Looking at individual economies, risk indicators shows a variety of pictures. The riskier markets look to be the Netherlands, Canada, Sweden, Germany, and France, he points out. If there's a savings grace, is that any pullback in housing prices will unlikely be as painful as the GFC due to improved household balance sheets. There you go. You can thank the lockdowns for that, everyone. We're all saved more. I'm just waiting for a domain article to appear, how the lockdowns were good for housing, or the lockdowns helped people save their home deposits. Just waiting. Arguably, sharp rises in house prices are more worrying if accompanied by rapid increases in housing debt leverage. Where's that happening? The rapid rise in prices since the 1970s coincided with a very large increase in the share of mortgage credit in GDP from 20% to 60% on a median basis across our sample. And some of the biggest housing booms, such as those in the 20s, 80s, and 2000s, were preceded or accompanied by rapid credit growth, he explains. The current housing boom looks less worrying on this score. Growth in mortgage credit in recent years has been relatively subdued, although it has started to pick up lately. The share of mortgage credit in GDP remains below its 2008 peak, and the recent rise is mostly due to the collapse in GDP in 2020 due to the coronavirus pandemic. As it stands, home price appreciation isn't showing much in the way of surprised reversals, in fact, quite the opposite. In the US, the median existing price for all housing types in June hit 363,000, the highest level recorded since January 99. Yahoo's finance Amanda Fong reports. The results follow the S&P CoreLogic's Case-Shiller National Home Price Index, posting the fastest growth in more than 30 years. At a broad level, home prices are in no danger of a decline due to tightening inventory conditions, but I do expect prices to appreciate at a slower pace by the end of the year, National Association of Realtors chief economist Lawrence Young says. Ideally, the cost of a home would rise roughly in line with income growth. Yeah, that'd be nice, which is likely to happen in 2022 as more listings and new constructions become available. So there you go, everyone. Concerns for a globe of the global housing price boom. So here's world house price upturn since 1900, pre-World War II. There you go. So there's the weighted price rise, the median, the 1920s, late 60s and early 70s, the late 70s. There you go. Boom, look at mid-90s to 2007 and the post-GFC. And, I mean, here in Australia, it's huge. I mean, I'll bring up this this property chart here. This is property prices. This chart goes to just 2019. We're seeing the dip materialize. And it's not uniform. This is the thing. It's in different quartiles, different parts of the growth. This chart I like to show it this map, because it really demonstrates the difference in house price growth or unit price growth in different parts of Sydney. And it shows you where it's doing well and where it isn't. And we've got to remember, we've just had our first recession, everyone. So our house prices, everyone was anticipating a correction. Everyone was anticipating it was going down. You had the Reserve Bank modeling up to a 40% decrease. You had the RBA modeling. You had the Commonwealth Bank and ANZ all predicting price corrections. But what happened? Government came to the rescue. You had Home Builder coming out. We had JobKeeper coming out. You had government intervention, government stepping up to prop the housing market. Now, if people are hoping that this will lead to a correction here in Australia, I think the question is, what type of government interventions will it lead to if there is a change in housing? What's the solution to this? How can we get off our housing obsession here in Australia? I don't know if we can. I don't know if any political party that goes against housing will be able to get in. I think we need to wean off it. I think negative gearing is an issue, and you need to phase it out over time, like a decade. So if you buy a house now, you only have 10 years left of negative gearing, then 9 years, then 8 years, 7 years, if you buy one. So then all the people who've got their negative gearing, there's a window, there's a time frame when it will disappear. And that's at least one way we can, remove the heat that we're placing in the market. What do you reckon? Do you think it'll happen? It'll be interesting to see this next election. As always, thanks for watching. Let me know your thoughts and opinions on this one in the comments down below. If you're a fan of the channel and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. Sign up for SelfWealth or Stake. Use our affiliate links at Amazon, eBay, Independent Reserve or AussieBroadband. Buy a merch from HeiseSays. Use Gold Pass from the Perth Mint or support us via PayPal. Take care, everyone. I'll see you next time. Bye for now.